Okay, g'day Pete, how are you mate? First in best dressed, I hope you're well. Now can you hear me okay? Of a bit of a sound check. You might want to turn it off. So I was just making sure it come through the actual channel and playing in the background. A little bit delayed. Bobby, hey, how are you mate? All good. How are you anyway? Hope things are well. So I'm just getting myself organised. G'day Joseph. Sounds fine. Nathan. All the usual suspects. The motley crew. Alright, let's get into it. Welcome to Trade Setup. It's a live stream for the 15th of March. So market's a bit strangely choppy. I can't complain because I did alright on the SPI, but not so well on the zip short that just didn't go anywhere like it has the previous sessions, but net up for the day, which I'm happy with. So now it's just time to babble on about stuff that we're watching. So anyone that's new, welcome. It'd be great if after it, if you like what you hear, leave us a like, help us spread the word, and also feel free to subscribe to the YouTube channel. And if you don't know anything about Trade Setup, feel free to go to the website www.tradesetup.com.au. There's enough material on there, there's all bits and pieces. We also have our live Discord channel, which we chat about a lot about intraday stuff, Hang Seng, SPI, some shares that are moving, why markets are moving. So we have a good old chin wag in that. So feel free to jump on that. If you need some more information, if you need a link, which I'll have to send out to you, just send us an email to support@tradesetup.com.au and I'll whip that straight out to you. Now remember, anything I babble on about today is just, it comes under general advice, so there's no specific advice at all. We don't take into account anyone's what is it called, anyone's financial situation or anything like that. You can read the general advice warning just down there. So trade at your own risk and just make sure you know what you're doing, you know where your risks are. I guess that's the biggest thing in this market, especially at this time. Now I'll minimize that. Anyone can't see it, and I'll just change over before I forget. And I want to talk today just about we'll start off with obviously an overall view in the markets and the ASX and bits and pieces. So you'll see this is a 5-minute chart of the ASX. You'll see this. Well, it's probably not so good. Let me just make that bigger. No, it's not so great either, is it? Anyway, that's a 5-minute chart of the ASX, is it? Doesn't look like it. Yeah, it is. So we had this little push down, which I got some of this short on the SPI, and then bounced straight back up. So that's, to me, it's kind of strange action to thrust down to that low when you can see that the selling capitulation come in and then bounce straight back up again. So there's something afoot. I like to say algos, and there's a lot of computer-driven trading in the market lately. You can't argue any other way, really. You can see it happen day in, day out. Markets will turn on a dime like it did. This sort of spiked down and then bounced straight back up. And then after that, this was on Friday, pretty much went sideways. So held on to those gains pretty well. When we trade in the Hang Seng, you'll see it on the Hang Seng, intraday especially. A lot of computer-generated trading, which will just chop away at the market. Have set up, if it's going up, set up shorts to drag in some more sellers and squeeze them back out. So, it's some strange times at the moment, which is leading me just to want to look at the overall index, which I'll get up on the daily chart. To Trading View, I think it just gives a better overview. So that's the Hang Seng now. I'll just get up the ASX. So we'll start off with the ASX. I'll go down to a daily chart. So this is what I think is an important thing. You've got this big, obviously when we hit all-time highs back in Feb. So this is what I don't like to sound like a reoccurring, record or a broken record and saying just be wary of the downside, but you're definitely going to be wary of the downside at the moment. Purely because you don't know. Everyone says stimulus in the US, they keep chugging higher, but it's been around for a long time. It's not like anyone didn't know that stimulus was coming through. You're seeing 1.9 trillion, so they said, "Oh, that should support it." in my view, if you're a trader, it's already supported. Okay, you're not looking for the market to continue on another leg up because stimulus checks have come through. I think everyone's placed and positioned themselves, and you got to think that way, I guess, as when you're trading. And it's not so much thinking that way. You buy the rumor, sell the fact. We all know that. So it's not really just getting into that mindset to take advantage of if it moves, but it's got to be, as you see something trade, is it happening, playing out, and it's also when it's buy the rumor, sell the fact. I mean, you trade what you see, but you also play on the defensive. That's just my view, because I think everyone is positioned a certain way, and they don't wait around to say, okay, now that everyone's got the stimulus check over the weekend, today we're going to go out and buying frenzy. It's already been done, whether it's the US, Australia, whatever. So it's not like this news has come out of left field. Left field news and stuff like that is what's going to catch us out. It's not what we already know is going to happen, and people have positioned themselves. The thing is, it's such a bullish market, especially in the US. It's kind of hard to stand in front of a freight train. Someone was saying about the Dow going up. In all honesty, the Dow's probably going to keep going up. It's just whether or not we're going to go with it. But if they turn, I'm getting the feeling that we're going to go with them hard on the downside. So we'll have a look at the ASX. Like I was saying, I already started talking about it and got sidetracked. But you'll see there's some key levels at play here, I think. We've got this inside level, which is at 68.80. Okay, so that was the high. That was back in July 2019. It backed off from there. Then we chugged our way into the new highs, retested it from above, which is all great. Then we took out and we pushed into new highs on the 20th of Feb last year. Okay, so that was a push into new highs, but then pretty much closed right back at the level. And that was, from there on in, it was just a massive sell-off that took us from 71.70, say, all the way down to, was it 4,400? So that is a big, big, big sell-off. All right, and what the market's been doing has been repairing itself for quite a while now. That flushed out a lot of, what you say, weak hands. Big flush out with this move down, and now we've been bouncing our way back. Sorry, I'm jumping around on I'll get rid of that. We're rallying back up now, but we're holding these key levels. Okay, so this is a key level in here. Off this move up, that was your initial reaction, bargain hunters diving in and starting to ramp price high. Then we went consolidated sideways a bit, had a bit of a flush lower, back into really what I saw as key levels back then. This little minor inside level around 57.27, that's where it popped up off and then grinded up, built a key lower high, and that lower high would have dragged in some sellers, from this leg up, even sellers that have been, would have dragged in some, what am I trying to say? Dragged in some sellers, but potentially people who've been long, squeezing out of the action. It's pushed back down. Everyone thought it's going to capitulate back then because, like the GFC, we had a bit of a big sell-off, bounced back 50% and got hammered after that. So I know that was what was in my mind. It didn't. It come straight back into that support zone and started to lift from there. So it's a bit of a heads up that, okay, we're going to go higher, don't know where to. And that's what we're trying to watch out for now, is that the market has held inside levels, continue to go higher, and you've got sort of, you'd say, dynamic resistance across those highs. They could have bounced off this level here and then bounced, straight back up. I'm talking about this inside level, but for now we look like we're consolidating sideways. I mean, this could launch back up and retest the highs, but there's a bit of confluence, what I'm seeing, which doesn't mean okay, let's go and sell the index. Let's go jump in short. Let's bail on longs. Let's tighten up our risks. So anytime I'm talking about potential weakness coming in, I'm only trying to reference the positions you have, trying to make sure you're managing your risk, because there is the chance that we're going to sell off. I mean, everyone's waiting for it. There's people still position themselves long. They're still jumping in. There's probably, a lot of savings in the American market that could still flow into the market. Not just the stimulus checks. Apparently, there's a lot of savings that are built up because of COVID. That now they're coming out with all the vaccines. Everything's getting worked out. There's a lot of savings that could flow back into the market. They're worried about jobs. They're not having to worry about interest rates at the moment. Inflation could be a problem, may not. It just depends how the bond market starts to ramp up a bit, or yields ramp up and bonds down, whether they trigger. I mean, as a side note, just remember, there's a lot of talk. You can read anything. You can read any opinion about anything, on the markets. Everyone's got a decent opinion, but there's a lot of talk about inflation. We know that. We've discussed that in the past. they'll talk about inflation, saying, okay, the bond markets, the yields are going up, it's going to force the hand of the Fed, they're going to raise rates. And then a lot of people saying, well, the way it's going up now is minuscule compared to where it could be before there's problems. With inflation rate, they're looking at 2 to 3%. Now, I don't know what they're at now on the CPI, on the inflationary numbers in the US, but they've got a lot of room to move potentially. It's not so much whether or not the Fed is forced to do something, it's whether or not the market thinks the Fed is forced to do something. And whether that selling, being at highs, it's not, like I said, we're trying to anticipate what's going to happen. We're not, a lot of people, if you're trading what you see. So if the market's going to anticipate it, which it does time and time again, markets never settle at equilibrium. Equilibrium could be at $1, on any stock, for instance. It'll never, rally to $1, stop dead. It goes to $1.20, back down to 90, back to $1.20, back to 90. It will just oscillate around that. So the markets will overshoot the market on the upside and the downside. So what we're looking at potentially, if the markets overshot the mark on the upside, especially in the US, and we're talking up rates, people will start getting nervous. You can't help it. Doesn't matter what the Feds can talk it up. They can talk it up. We're not going to do this. We're not going to do that. That's fine. But if interest rates going up and people are thinking it's not what you're saying, it's what you're not saying, then we might start a sell-off, and that sell-off starts capitulating because people are chasing their tail. That triggers more sellers and more sellers and more sellers. That's what we're worried about. So it's not looking at their bonds going, well, we've got heaps of room to move. Let's not worry about it. You're going to have to worry about it if the market starts selling off. You've got to, you're loaded to the hilt into US markets, or you're loaded to the hilt in shares, and we start to see a bit of a sell-off. You've got to think about it. You've got to, not say, well, that's all fine. It's going to come back. It could come back, and it may come back over time. But if you're trading margin, you've got to be very, very careful. Different if you're trading straight out stocks, but you've got to be very careful if you're trading margin. You've got to react to what the market's doing, not what the news is telling you it's going to do. Because they're just beating the drum anyway. So back to, I had a lot of things going through my head there. I was just going to discuss. One thing leads to another. I get sidetracked so easy. I go off on big tangents. So sorry about that. But yeah, back to the ASX. This is what I'm seeing. I know it's, like I said, it's not about we could just drift lower. We might start to test some of these lows. We may have a massive sell-off. We may not. We may just sort of pull back, consolidate, and then go again. And that's the pullback of this leg up. But what we're seeing, I just want to see where that has taken us. So this is, if you know what I'm doing, I'll do this time and time again just to get these measured moves. There is still room to potentially move up through into new all-time highs. If that's the measured move up, whether we're taking it there, if we're taking it, let me just see, if we're taking it sort of from there when it was a bit more, it wasn't just a massive bounce, the reaction, initial reaction, well, then, that takes us to about where we are at the moment. So there's a bit of confluence around why the market's getting a bit toppy here. It's getting a bit heavy, and we've come into this, like I said, 68, 80, thereabouts. This was the high before, once we retested. So it's been an action and a reaction zone before. There's a reaction from sellers, then it broke through, then a reaction from buyers up, then blasted through it. Now we're sort of reacted off there previously. That was, what date's that? That is back in Feb, 17th of Feb this year. It reacted off there, and we tried to bounce back up. So at the moment, to me, it just looks like we're breaking potentially to the downside. It's not confirmed yet. We're not getting out of hand, but it seems to me, it's typical of the ASX. We get spooked easy, but we're very, very slow to rally. So it could be a bit of that, and we're going sideways before we ramp. We don't know, but at the moment, this to me is suggesting just be a bit tight. If you're going to enter into the market new, on a new share or anything, especially in the ASX, be mindful that it's a high probability setup. You're not just going late into a trend and find the trend up. I think I would be, when the market, if you're looking at this sort of zone, okay, if there's some setups and you're following the trend, that's great. You're getting late into a trend, that's okay, but because it's sort of in no man's land here. But when you start to get late and you've got a bit of confidence on the downside, and we start to see this break, which I think there's a lot of people looking at this level, potentially we could go straight through 66.60, then I don't think it's the best way to get in to a share that's already been, it's a confirmed trend. Everyone knows we're not buying the unknown, we're buying the known, well and truly known. Yeah, it could keep going, but I think probability-wise, which is what we're trading, just probabilities, it's not a high probability move. I think it's a high probability move if you're getting a setup which had a good correction. So what it can do if this ASX sells off, it could still go up, or it could weather the storm a lot better because it's already squeezed out a lot of people. Okay, so we'll see how that goes. But yeah, I'm definitely watching that a bit closer. We are on the daily chart, so it could be bouncing around here. If you drop it down to say a 30-minute chart in the ASX, it looks like it's getting supported here, but at the same token, it's holding lower highs. So it's sort of maybe we're just fluffing in buys. We push up, and then markets come and sell back into it again to keep that trend going. So until it sort of breaks up to 68.30 or 40, then we either got some sideways action, or we're going to start to edging higher, potentially to retest the highs, 68 or 6900s, thereabouts. Sorry, not 68, but we're trading 68.80 or 6900. We might edge back up here and fail off this high again, and still, start to really unwind in the downside. Let's look at the S&P. Not much is happening there. I don't see. We'll go back to a daily chart on this. They had that similar structure, sell off here. They've pushed into new all-time highs. It's just, let's throw some money at the market. We want it to go higher. Keep those printing presses going. Surely they're worn out by now. Who knows? But we're back into the highs in the S&P, the big S&P, okay? So whether we just continue on from here, and it's that break there that sort of got me. Whoops, let me just try that. It's that. Whoops, it's not working. There we go. That's probably a bit better. It's that break there, that little push down there, and we're pushing. This uptrend to me is breaking. It hasn't broken an anchor just yet. That would be the anchor to the downtrend. It didn't even really get there. If you can see that. So that's the anchor to the downtrend, sorry, the uptrend, which hasn't been broken. It held, it's retesting the high, so we could just keep going high from here. Then you'd have to start adjusting all your price action. It doesn't really make a lot of sense why we should head down and we don't get much of a sell-off, then bang, straight back up. I mean, again, that could be the algo trading, the buys, squeezing out some sellers that have started to build up, straight back up again. And they've got enough juice to continue higher. If you look at the NASDAQ we know is starting to fade lower. Now, even that, you've got a breakdown of that longer term trend on the upside. That's the longer term trend off the lows from March. Holding. We've got this breakdown of that trend, and now we start to look to potentially heading back up again. Okay, so where are we going to from here? I don't know. We've got some little resistance levels on the NASDAQ about 13,250, 260. We could retest that and fade off that level. We may just fade from here. I don't know. I'm not too keen on the ASX. I just know that the US is a tad harder to try to predict what's going on, purely because they've got so much money, and the story in the past has been stimulus, markets go up. Stimulus, markets go up. Every time they talk about it, markets going up. So if you're a bear, you've been well and truly put through the ringers, and you're not going to fade this move. You're probably not going to try to fade this move. And if you're a buyer, and then stimulus comes out, we're talking more stimulus or whatever, then bang, you probably there's really one way to go up. So it's a bit tougher gig to rally from here. Sorry, to roll over from here. Look at the Dow. Dow's just pumping into new all-time highs. That's, if you don't think that's extended, you might want to check yourself. To me, that's well and truly extended, but it has been, before, and it just keeps pumping away to the upside. Are we going to get resistance coming in here, or is it just going to keep, ramping up on the Dow? Is that talk of, was it buying value now? But how long are you going to keep buying value? You keep ramping these stock prices up. PE ratios in the US are massive. Well and truly, averages are high, so the market's extended. We just have to see. It's not cracking, and that's the thing. I don't think the US likes to crack. They'll just keep chugging away, and it'll look like a screaming buy, and then one day it will just turn, which will catch people off guard. And I think a lot of people knowing that our market's getting a bit exhausted, I would feel, up here, the way we're, like the sell-off today, it sort of got smacked pretty hard, and the way it got hit, it wasn't a gradually grind down. It was a beating, stopped, and then got ramped back up. So for whatever reason it got ramped back up, it's still, there's some negative sort of biases out there at the moment. We'll look at the US dollar. So just get ready, guys. We're going to start chatting about some shares, so get ready to put in some shares if you like. Let me just check something before I keep jabbering away. Yeah, that's so good. What are we looking at here? The US dollar. So this is on a daily chart in the US dollar. Now, that, if you're arguing that's a downtrend, well, you're probably right. The US dollar, people are saying all this stimulus is again, from an analyst point of view, when that US dollars come in through stimulus, yeah, it should be negative. But from a trader's point of view, you would think it's been factored in. And I think the way this market's reacting lately, the latest news of 1.9 trillion has been around for a while. They've been talking it up for a while, more stimulus. And now that Biden's come, he's the new president, they knew that was his agenda, and it's coming into the market. It's already a known fact, that it's going to hit the market. So we sort of, the market sort of anticipates, so maybe this zone around here, around the 89, 90 is a fair value, and we're getting that sort of people who have been short in anticipation that are starting to take some profits off the table into the US dollars, and you could get a bit of a pop. I think couple that with interest rates and inflation, it's twofold. Yeah, lots of US dollars it should be negative on the US dollar because of supply demand. There's more supply, equal demand, prices should go down. But you also got, on the flip side of that, inflationary effects of into the market could obviously, we're looking at potentially soaking up those US dollars. Inflation should be pointing higher. Is good for the US dollar. In the carry trade we've spoken about before, it's if the US is the only place that's sort of rallying, that's doing well, they can keep printing as much as they want. But if their stock market keeps doing well, the US dollar does. It gets supported by flow of funds. We know from outside into the US, you've got to buy the US dollar if you want to trade US stocks. If you're an outside fund or a bigger flow of dollars, or you're looking at the two currency pairs, you go, I'm getting nothing for the Aussie because the RBA is doing nothing. I'm going to buy US dollars and sell Aussie. And so we'll look at the Aussie in just a second. Is that what's going to happen? The Aussie's going to come screaming down because they're going to start buying the US dollar up. At the moment, yeah, that US dollar looks like it's either finding a base or we're going to get a bit of a grind up and then roll. But I think that's going to take some time, or is going to accelerate to the upside because we've got a lot of fuel on the downside that could get squeezed back out. I mean, we don't know. This kind of action is what we're seeing now is reminiscent of what we saw back in 2018 around these lows as well, which is slightly higher. Is that action, what we saw before, going to start to lead for a good ramp up, which we could easily ramp back up to 94 or so. Before longer term we start heading south. Now, if that ramps up to 94, that's going to affect commodities, going to affect the Australian market, put downward pressure on things like copper that's ran hard, crude oil. Well, crude's a bit more manipulated than anything else, but gold, that sort of thing. Higher US dollar, if it's everything's turned in US dollars, a higher US dollar, it makes it cheaper. More expensive in US dollar terms, but cheaper in US dollar terms, but more expensive in other Aussie dollar terms and things like that. So let's look at the Aussie. Now, this is on the Aussie too. You've got this push up here. That's been the trend on the daily. And we're starting to break down after this little flush up to the highs. Started to break down, and we're going to continue to hold lower highs and pressure right down again. We'll wait and see. But to me, the way we've broken that uptrend leads me to believe we're going to get some sideways consolidation action up here, or are we going to get a bit of a shift? Failed highs, lower highs coming, pressuring the market down. On that daily, that little red candle there is not looking too crash hot. And if you go down to we'll look at a lower time one. Normally I'm looking at the 30-minute chart. This is the short-term little pop on the daily, and we're starting to get, that was a red candle, roughly here. We're potentially starting to break down on the Aussie as well. The fact that we're just failing off 77, 73 today leads me to believe that could be a little, good little sell. Look at that. I mean, that could be, you're going with momentum. The way I look at MACD, momentum and everything, momentum starting to roll, get a bit of divergence here. That's actually a really good setup, to be honest. So keep an eye on the Aussie guys if you want on the 30-minute. We could, sell off from here. It just depends. I mean, this could be a trap, but until we get through that 77.46 level, another 12, 15 pips from here, I'm actually liking that. You got a little double top. It's starting to fail off that double top. Failure is not confirmed until we start to break that uptrend, which is this little level here. So you really are going to start to attack this zone down here. If we start to doubt, we've probably broken that. That's more of a confirmed double top, minor double top, or we call it a retest fail. and anyone that's been buying it in here gets squeezed out. On top of that, you've got all these buyers in here starting to get more confirmation that potentially they should be out. And then you couple that with a lot of this daily action that's been up for quite a while. So just keep an eye on that, guys. It's worth watching and see how that plays out on the Aussie. Pound is a bit of a chop fest at the moment. We're looking at that getting to 1,440. Sorry, 1,400, 1.4. Bang straight down off that level with really not much of a warning. It's bounced back. Whether that's going to find some selling, it's sort of getting stretched. When you start seeing that, last time we're extended was here. We've only got through that level once. Before that, we're right up at this 1,400, 4,000. We're starting to get a bit extended now. Is there going to be some heat? We're getting a bit of divergence potentially. By divergence, I mean this kind of thing on the MACD. If that plays out, if it starts to roll from here, so there could be some opportunities on the downside on the pound. US yen's a good one to watch just to see what happens with the US dollar. And that to me looks like it's consolidating here for another leg up, which would suggest high US dollar, which goes into that weakness we're talking about with the Aussie and the Euro, probably the Euro obviously, and the pound. So we'll bear that in mind, guys. Let's I was going to look at, is that all making sense to everyone? Does it look okay? Do you believe me or not? Let me minimize that. I want to get up. All right. So I want to keep an eye on that Aussie. What's the Hang Seng doing? I've just got to look at that. Oops. Not too flash hot in Hang Seng. It's holding okay. Yep. Good enough. Now let's go back to the daily. Geez, where are you going? Stay there. Mouse is a bit jumpy at the moment. Okay, I was going to look at just quickly copper. Copper looks, it looks strong. I've got a lot of rubbish on here. I'm sorry about that. So I'm looking at mainly the on the shorter term time frame. I actually looked at the daily for a while. It looks quite strong. You're getting a bit of a pop. There's an inside level here. If I just take that out, which copper could retest. It looks like it's potentially going to retest, but then, it's still, this leg up here is obviously extended. It's come back and retested this level back in around 4, say 4 even. Bounce back off that level. But if US dollar starts to find some strength, that should weigh, you would expect. And you can see how the way it's getting a bit extended up here. We got momentum that was quite high up here. We had a pullback. Now momentum up is still, it's still fading, if that makes sense. So when you start to fade in momentum, something like this, it might pop up and keep going back down to that zero line. So momentum's still coming off. And when you get that second push into that, especially with stochastics from the buyers, are starting to push it higher, but it could potentially fail at a lower level. If that's the case, we're going to start to fail here at 1,421 thereabouts. Then that opens up a bigger correction, opens up the potential for a bigger correction. So there's all these sorts of things. If you keep an eye on a whole bunch of them, what is copper doing? What is oil doing? Some currencies, the dollar. It gives you an idea what the overall sentiment or bias for the market start to be. But that's what I'm looking at copper. Shorter term, get into the 30-minute. That's looking quite good. Structure looks a lot better on the 30. It's just this level in here, that 421, which we're saying if it starts to pop up there and fading, so watching the lower time frame, then we've got a problem. If it pushes straight through and holds a retest at that level, yeah, don't worry about what I said on the daily chart, but it could be going back up to these highs. So I'm still got my eye on the way it's held nicely off that zone. It's on the way up. It's just whether sort of this inside level is going to cause an issue, which makes sense on the daily, but it doesn't mean that it's going to. Okay, so just watching that. Now, if that can blast straight up and through, there's a good chance that US dollar's fading. It's getting some selling pressure coming in. But at the moment, that US dollar is... No, it's actually coming down at the moment, but we'll have to wait and see. When did it open? At 10 o'clock. Last thing, I know there's a lot of gold bears out there. I'm not as bullish as a lot. I don't mind the way this has bounced up on Friday night. It had some selling pressure as the US dollar was rallying, but when the US dollar turned slightly, it did get sold off a bit. Not anywhere near as hard as this got bought up on gold. So it looks like the bears are out. So the bulls are out there trying to make a statement and support gold, but it doesn't mean that this is over just yet. We've come and we've retested this inside level at 1738. Longer term structure is still down. If we hold and retest this level around, was it say 1738, then expect another fade off that level. We could flush through and push back below and just watch that, watch around there. If we start to get up, then there's nothing to say that we can't get up, retest roughly 1758 and then fade. Because to me, it's all about this longer term trend, and we're just in a bit of a corrective mode off that 1665 lows or 1680. It could still have a lot more to come, especially if that US dollar's got a good rally in it. Okay, so it's all sort of factoring around still that US dollar. Now let's look at some shares then. Let's get into it. Where's the XJO? So we're up 14 at the moment, which is quite handy, isn't it? Just have a look at the SPI. Anyone that's interested? Look at that, pumping up. So this is, like I was saying, what I was shorting here. And then as soon as we got this break, as soon as we really pushed, let's clear all that. I'll do a new one tomorrow. This was the downtrend. So it was in here that I was shorting it. I think I shorted on that break. When it pushed down, it popped up, started to come down. I shorted some more, flushed into lows, took it off. The fact that it come up quite hard, you've got to be careful because, this kind of green candle, it's on anything. The way it bounces back after that hard sell-off is, it's got to be a heads up if you're short, saying, well, what is happening here? You bounce back and we start to grind down, especially when you're looking at a 1 minute chart if you're trading on those time frames. And we start to grind down, just watching out for that high low, which did play out. Go to the 1 minute chart just to talk about. Yeah, you can see this. It kept getting held up, so that when you're looking at that 1 minute chart and you're expecting more downtrend, after this big expansion, we moved down and it come ramp straight back up. You've got 1, 2, 3, 4, 5, 6, 7 green candles in a row, 8 green candles in a row even. Off this low, got soaked up here, indecisive. It started to push down straight back up. Next expansion, bang, up. Took out some lower highs, really creating concern for these sellers. And then we paused up here, which is fine. Actually, we broke out of that trend down, took a room to pause, and that's going to happen all the time. And it entices, because people are looking at it saying, I'm more of a, when I look at levels, I look at an exact level, and I want to see a clean break of that. I want to see this little break and then start to see some weakness. I'm not going to sell in there because I think we're going to continue the way down. I'm more inclined to look at that and go, oh, look, if I'm going to sell, I want to see a lower high. I want to be confirmation, something like this, to jump on board, lower high, and then looking to expand through the lows. But that keeps me out of selling it just there. But when you don't really start to form that lower high. Like here, there was a chance that we broke through that low, but instead we've bounced straight back up. So you've done the reverse. You've created that higher low, and we're looking for expansionary candles back up. But that all comes from taking note of what happened on that candle there. Sorry, again, I got sidetracked. Sorry about that. But yeah, that's just a bit of a tip. You can see the way we pushed back up here, I was expecting more of a cup to form here. Look, it sort of did, the way look at that 5 minute again. That sort of cup and handle here, cup, couple of chops around, and then another expansionary. And that's when sellers that are starting to step in here realize they got it on the wrong side of the market. So it's looking, either way, that SPI is looking quite strong. Yeah, and that's the ASX view there. Looking quite strong. So just getting the shares. We've got a couple here. Sorry about that. We've got REG 360. What's 360? Oh, before we go, this was something just to take note of. ATC, for anyone that's interested. Now, I found this on, and as you know, I'm not the world's best fundamental analysis. I generally heavy weighting onto my technicals and volume and things like that, and trying to get a read there. But what I did see is it started popping up. It's getting talked about a bit in Twitter, on Twitter. And we know that there's a lot of people who would read Twitter. A lot of retail would look at that, look at this and go, oh, look, it's holding the news. News headline alone. Altec, breakthrough silicon alumina coating development. Okay, that's bullish enough just in that heading. It's a great heading. I don't know what it read through later on, but that led me to look at this and look at the price action saying it's looking pretty good. I mean, honestly, you've got some volume, some really good volume that's ticked up here, which you've got to take note of. I'll drill in on that a bit more. So don't worry where it's come from too much. We're looking at the price action now. Let me just get up my drawing tool. Just bear with me a second here, guys. But where you've got these lows that have been put in place here, we'll use a big thick one there. And then you've got a break through those highs. Okay, quite clearly. Break through the highs, but look at the volume that's coming in here. Okay, that's, whoops, the volume that's in here, and then you've got another lift on that news today. Is a good sign. It looks like there's buyers that are out. They want a piece of the action. But for me, it's still that 6.5, well, 6.5 cents that I want to see. It's held this high low. I want to see a bit of consolidation just under that level if we can. If we can sort of pop up there and we start to do the chop around there, then it gives us somewhere we can at least analyze our risk a lot easier. It doesn't mean just because you've got that news headline, if you drill down into it and you start reading it more, it might be a rubbish headline. Who knows? It happens every day of the week. They'll pump it up, try to get that share price lifted, try to get all us technical analysts to look at the share price and go, oh, it looks great. But they know retail will buy that. You know, you look at that headline, bit of FOMO, price lifts, good volume, you know, chase it higher, but there's been some selling just recently that's pushed it back off that 6.5 cents. It's only 0.5 cent, I guess, but it's still pushing down. So just watching, I think it's worth watching out. I want to see what happens in here. If we can hold another higher level and start to confirm over a bit of time, that could be a good little runner, especially if it is really good news. You know, if you find out it's good news, we know that that Twitter following is going to get ramped up. Going to be some retail soaking that up and looking into new highs at least. That was one that just popped up. We got REG from Pete. Let's have a look at that. So it's gone through that $2 mark, but even though it's gone through, it went through earlier. So if this is a strong market, the biggest problem is, let's look at the weekly. Look, it's sitting on the weekly. It could start to expand, and that's the thing. It's just there's not a lot of volume basically this year, is it? Just bear with me a second there, guys. Just one second. Someone's at the door. I want to get rid of it in a tick. All right, back. So, what was I saying here? So the weekly, okay, the good thing is, you know, it's been a downtrend for a while, but it's been holding, if you look, holding MAs, holding MAs, holding MAs. It's sort of chopped around a bit here. It didn't do anything like any decent enough consolidation above the MAs, which is what it's doing now. It is a bit extended for me on the weekly chart. So we had this ramp up at the end of last year from oversold to overbought. Ramped up. It had a couple of good weeks, then it's went sideways to the end of the year and hasn't done much since. Okay, so that's a bit of concern that if we start to get, it doesn't do too much, you want it to start to kick off soon. There is a concern that it could roll over back below the MAs. You don't know what's going to happen, but the fact that it's spent a lot of time above these MAs here is good. It's just that the volume's coming off, so it's sort of, you wouldn't mind getting, especially with these push up through 2, rejected 2, back through 2, back through 2, above 2. We might reject it, we might continue on. It hasn't been supported by a lot of volume, so that's my biggest issue with it. The structure itself, this sell-off, this fade, that was through Feb. It didn't kick on like, you know, a lot of other stocks have come straight back and gone even higher than where they were prior to that sell-off. Regis hasn't sort of drifted back down again, retested those lows and has been bought back up. Got through sort of these previous highs, like we're saying, got through these levels, And it's sort of drifting sideways again. So that's not the right one. So it's this kind of, yeah, this is a good sign, the way it gets brought up here, but the way that it sort of popped above 2 and then back down again, I don't like that as much. And then this action here is kind of, you know, there's selling coming in here, which I don't like, and I don't know why. It's just this overall action is looking good. It's holding above the MAs, which is a good sign. So sooner or later, I would expect one side's going to win out, buyers or sellers. It looks from the weekly that it's buyers could start to, they're finding support because they have put in a lot of effort. And the fact that it's been holding above there, pretty much going sideways for the good part of, you know, a few months now, is a good sign. You know, that's a good sign. The longer it consolidates through here, the less likely, if you're holding it and you're down, you're going to sell. If you're holding it and you're up, you know, you bought it from here, less likely you're going to sell too when you see that. The more likely I'm going to sell is when I see some sort of spike and it comes straight back down again. I'll probably sell out because I'm sort of expecting a lower high coming into play. But when it pops up like that, this kind of action, and then consolidates sideways, that's not a bad sign. You would expect it to travel higher, at least, you know, back up to 3, maybe up to these highs up here. What's that, 350? So it's got a bit of juice on the upside if it can get up there. Now, if we go into the daily's what I wanted to sort of look at. Let's just drill in on that action. It's not convincing as such. That daily action is not too convincing. It's starting to get a bit of a run on, but I just feel that if it was going to go, last couple of days it should have gone. Okay, and it's had some really light volume through here. You can see all this action, you know, pretty much the last 3 months or so. It hasn't done a hell of a lot in the way of volume. Even though it's holding up off the weekly, it's looking good. Held up here, held up here. All that is looking good right up until about this time. It was looking great for an expansion. So you wanted to see that next day not be red candle, if we take that off, not this candle be red, but be green. Finish on this green and then pull back and retest that $2 level, then go. Then you've got your high low. You've got some good price action. The fact that we sort of pushed up, had a couple of red days, doesn't leave me... No, I wouldn't go for this stock, to be honest. It looks good. It's just this action here I don't like. I'm sort of looking at it going, bit of a wedge in here, which could resolve itself down. And that's after all this action too. You know, good sell-off. Didn't really fight back like a lot of stocks. Come all the way back down to retest the lows. Had a bit of a ramp. Didn't really get through those highs with any conviction. It started to get up to the highs, chop around. It's been chopping around since. So that, for me, I would probably stay on the sidelines of this because I think it's had more than enough opportunity to kick on. If you've got it, you probably just want to tighten your stop up because if you're going to be proven wrong, you're probably going to be proven wrong fairly dramatically. You know, if there's a big sell-off in the market, US and Australia, and we end up down at 65, 64, 63, expect that Regis is going to cop it on the head as well. 360. Let me have a look at that. Yeah, it's a bit the same with this one. What's this? That's your weekly chart. You can see there's been... When did it come on? It come on... Was that last year? 2019. It's been selling down since 2019. Start 2020, that was your sell-off. Then we retested those lows and we started to head higher. So we get a leg up here, we consolidated, we should expect another leg up. That's what I would be expecting on the weekly basis. Now on the daily, that's your leg up on the daily. We've sort of flushed down, held this inside level. We're holding levels, but we're not kicking on convincingly. So it's a lot the same as the last one, Regis. If this was great, you know, that entry in through what here, or even on that day, through the previous high, that's a cracker. Let's just look at that. Where's my mouse? Disappearing off the screen again. Can everyone see what I'm looking at here? That's your high low. That looks good. You know, we're holding these higher levels. To me, that there, we break through that high, you buy, you've got your risk below, you've boxed it up. That's really nice. It's nice and strong. You've got rising support. It kicks on. Problem is, 2 days later, bang, straight back down there again, and you're in negative territory within a few days. To me, if that's strong, shouldn't happen. If that wanted to go higher, that kind of action shouldn't happen. It's had more than enough reason consolidating through here. Buyers, any sellers that should be squeezed out. So up until when it broke out, it was looking good. It was looking good. It spent a lot of time, you know, it rallied quite hard over a couple of months. Spend the next 3 or 4 or 5 months consolidating, pulling back. So any weak hands should have been squeezed out of the action. Okay, and we're holding inside levels, so that was more than enough to go. I'm expecting a good run on from here, but it didn't. You know, it popped up. It was looking great up until we got this inside day. You know, just in here when it started to fail and come all the way back down. Couple that with, you know, a gap up here. It gapped open, pushed up. Next day it opened lower, and then got some weakness all the way back down again to below 4. Now we're getting sold into again today. So I'm very suspect on things like that. I don't like to see that selling pressure up towards, you know, 450, 475, even 5. I think there's a bit of, for some reason, it could be just a seller that wants to unload up here, and we don't know if it's gonna trigger some more selling. But either way, it's a bit of a cap in price at the moment. So I would be just a little bit concerned that that's not going to kick on. So for me, I just, you know, simple case, tighten your stop up below, you know, say 375 for instance. If you happen to have an entry lower than that, great. Lock in some gains, because if it breaks through there, I don't think it's going to come back for a while. It could be looking towards testing these lows at $2. So just be wary of that. Does that make sense on that one there? Next one we've got, Pete's got that. Joe S. Whoops. That weekly. So the weekly, even on the weekly, it looks like it's grinding down. It's just whether or not it can hold in here. I'll have to draw it to see if it's actually. I want to see if that trend is still intact on the downside. There's my little man. There we go. Yeah, it's still intact. So the weekly is heading south. We've had a pullback on the weekly. We're starting to roll again. Okay, so from that weekly, you'd want to be short. You potentially want to be short. The bad thing is it's late into the trend. So I probably wouldn't short it from the fact intraday, yeah, it could be a go up on the downside just by looking at that weekly, because you've see that level. I'm probably not going to, it's probably going to be clear on the daily, but you can see this level through here, 125, say, popped up, rejected, flushed through, rejected, and then got sold off and took out the lows. Not a good sign for bulls if you're buying in there. So that trend is starting to get confirmed again. And then you've got basically what you're seeing is a move up, move down, move up, potential move down, break this level. We've got a lower high in play. You should be looking towards, you know, 50 cents. Doesn't mean it's going to get there because you are late in the trend. But if you saw that action after a good move up and you start to see that action, you know there's a lot of juice built up long, and you start to see this action, you'd want to be out. Or you wouldn't want to be looking at a buying opportunity. So even though it looks like a sell, I think the only thing could be saving it is that it is late into that trend in the pullback from 2016. It has spent a lot of time heading south. That's on your weekly. Now let's get into the daily, see if it's showing me something different. Not really. You know, to me, honestly, it's holding lower highs. Look like it's going to break down. Looks like you could potentially short that. You stop just above basically 92.5, sell the break of 87.5, potentially nearly today, was it? 87.5. Ooh, 87. On little things like that, especially on sells, I like to give it at least a cent move. So looking at say 86.5, you could still look at that tomorrow. Risk above, looking for that to fade, the trend to fade. Any bulls that are building up here, give up. You know, we've got confirmation 1, 2, 3, failed off that 107 zone. Lower highs are coming into play now. This lower high is going to put the squeeze on anyone that hasn't got out yet on the buy side. If they don't want to, it just means that there's probably going to be less buyers willing to line up. Like I said, the only thing really holding it and saving it is potentially that the trend down on the weekly. It's well and truly established. So with that's the case, why would you want to buy it here on the way down? You know, you just want to sort of step aside for it at this time. Like I said, anyone that knows the way I trade, I'm looking at buying on the rise, buying with momentum. It could be off a good correction, short or long term, but I want to buy on the rise when the market's heading up. and I know where my risk is. I know that probability it's going to continue up is a lot higher. Probability this is going to continue down for me on SLC, so I'll be more inclined just to wait it out. It's got to hold up. You've got to hold up and start breaking some of these lower highs. You start to attack some of these lower highs. What you're doing is changing the sentiment from buyers. Sellers being in control, potentially buyers starting to be in control. What's next? Joe, WOA. Then we'll do the two more. Let's probably take us to the end. Now that, to me, it's a massive correction here. I would rather see that corrected here and continue higher. And you'll see what I'm saying in just a second, but it hasn't, which means where's it going to? The trend is down. Anyone that's been buying sort of on these little pop-ups, so you've got a lot of fuel, is what I'm trying to say. So you look at who's lined up on the buy side. Has been enough movement down to flush a lot out, or is there going to be a lot more to come out, which means more pressure to the downside? Or is it getting soaked up? At this stage, it's not really getting soaked up. We're getting pops, and pops are getting sold into. You got this good rally here, popped in here, should have continued on, sold into, took out the lows, consolidated here, rallied up here, popped up here, lower high come to play below this level at 130. Sellers come in and pushed it through the low. So we're continually popping up to new highs, getting sold out, taking out the most recent high low, and continue to go down, go down, and go down. We're popping up now, so we're going to continue this trend. We're going to ramp up a little bit and then get sold off and take out this low at 60. We don't know just yet. So drawing that up, and this comes down to me, just looking at this leg here. You've got that leg up there, so I would have expected this pullback here to go, and I would have been looking for more of, that's probably not the best action there, but something like this, no real high low. I want to see a good high low and then go. So I'm looking for that break, pullback, go. I want to see the first high low. What happens with the first pullback? Does it get soaked up, bounce off the MAs and go? It didn't. It just basically, continued down, which is not a really good sign. Okay, it just means that you've got to reassess what's going to happen in the longer term. We're in a longer term contractive mode. Check it out. So that's the trend up that's being broken. Okay, so the trend is down at the moment on the daily and the weekly. So what are we looking at? This is the trend down until that breaks up and out. I don't mind that at all, because the key level, it can contract as much as it wants. So the market, just because it's broken through this low, does not have to keep going down. Okay, so what you look at, we always talk about anchors. So at this stage, it's something like this. That's the anchor. Yeah, the trend up you can define by, I'll just draw that a different color. You can define by, say something like that. That's this, for instance. It can break down, that's fine. Okay, we can do whatever we want up here because it hasn't broken the anchor. You want to see, you're looking for an opportunity to go long off here, potentially something like this, buy off a higher low, and then, okay, it's going to continue on, it's going to look great. But when it breaks through that level, it doesn't mean you've got to bail. That's why it's so important to know where your anchors are. That's had a good expansionary leg up. We probably just need to flush a lot more people of that move up. It just went straight up over a couple of days, and we spent a lot of time cleaning them out. We haven't broken the anchor to the uptrend. So anyone that's bought it in here is still, they're still up. Okay, so if we start to break that out, it looks like it could look like rubbish. But for now, what we're waiting for is really this to play out. We want to see it break up through 80, potentially push to 90, $1, and then we want to see what happens on the first pullback. If it just goes without us, that's part of trading. It gives you the irrits, but if it just goes up from here and doesn't look back, you just get this big rally like this, then so be it. You don't want to get caught out with buying, you bought something like this and then it turns around and goes bang and you get stopped out, or you're underwater at the moment. Okay, so that's why I'm always looking. You've got expansion. We've got a lot of contraction that's been happening for a good part of a year, I think. We want to buy into expansion. We don't want to buy into contraction, because contraction could be a sell-off. We're not confirmed. Nothing's confirmed. There's no reason why this can't go all the way back down to where it started at 20 cents and do nothing for 3 or 4 years, like a lot of stocks do. Okay, so we really want to see it pop up. What happens on the first pullback? Is this going to be the start of a new trend up? First pullback will give us some hints. Something like this might consolidate sideways and then give you an entry signal, and up you go. Okay, so we'll just keep an eye on that one as well. It's actually a lot better than the other one, the SLC, for me. DCN. Not very good. It's a hard one because it's done. You're probably going to have to discount that action there. Much the same. Yeah, the thing is, we're probably, if you just go back, this action here, it's sideways essentially. If you take into account everything from there, there could be a lot of juice that hasn't, holding on. But the longer they hold on, and the more, grumpy you get for not selling out. Well, you couldn't really sell out, to be honest. It's gapped down and then did nothing. I don't know what the reasoning behind that was. Is there any particular, just bad news, or was it? Actually, it was in a trading halt, wasn't it, for a while? Got smashed. So whether or not there's some juice, people have been holding it through here, didn't get a chance. They're still holding. If they're willing to keep holding, then good on them. If they're going to get antsy and just cut the losses after all this time, yeah, it could create some downward pressure. So what we're really trying to do is just figure out what's happening in this movement through here. I want to get that high. There's one little high I want to see. That there, that's what I want to see. So we've got that high, I'm assuming it's somewhere around 60 cents. Okay, unless can't see if my line's straight or not. What's that level? Just 1 second there, guys. High of 60, say. High 59, so it's just a touch. It's a touch below that. Where am I? So that high is a touch below that high there, that's fine. And then we've got, obviously, it's made lows. It's put in a bit of a base, which it's reacted. It didn't quite get there. Reacted off here, quite a few times. Tested, held, started to lift a bit, come back in there a few times after getting, a little minor push higher. Tested. Then we've got this ramp up here, back up to the other side. So it's rangy still. It's quite rangy. So we're really trying to assess, is it going to start breaking down? There's nothing to say, the way we've gone from overbought to oversold in here to overbought, and we can only manage a push up to around 41, 42. Last time we were, well and truly overbought, we're right up at 60 cents. So I would be inclined to just leave it. I think it's more range bound still at the moment, and especially with my views on gold and not to crash hot. I want to see gold start to trend high. It's not. It's still trending lower. It's correcting up at the moment. So you've got to distinguish the difference between that, a correction and a trend. Gold, just because it's come off that below 1660, it's not trending higher. To me, the longer term time frame, is trending down, and it's just a bit of a correction at the moment. So until that establishes on gold that it's going to actually pop up, I wouldn't be looking to jump into DCN just at this stage. I'm still looking at that, sideways range band action that's been happening for a good part of a year and a half or so. If you just drop it in, and like I said, it's not really that action there. This little run up here, we could easily get a lower high and we push back down below 40. It needs to have a good little run up to 50. Even not that, if it has a bit of a pop up, pulls back and consolidates at a higher level, it could be a buy, but then you've got to be looking back up towards that 60 zone. It could retest 60. So if you can get an entry, at 40 or thereabouts, off like a higher low, and what I mean by that, I'm looking at because remember, everything's about your risk reward. We're not trying to pick the lows or pick the highs. We're trying to take out the best sized chunks that we can. So that's it's bounced off the lows. We've got this little run up. There's nothing to say it can't just turn around from here, retest 32. So buying up here, a bit risky. If we do that sort of action, I'll draw it over here. That sort of action is here. Pull back. I want to see it get soaked up at a higher level. And then I'm probably, you could be willing to buy if we get soaked up here, buy on the rise, looking for a break of that 42 level. Potentially, where your risk is, exactly, you're not risking too much, but the fact if we buy at, say, 42 even, we could be anticipating a run back to these highs or even 60. Now, who's to say then it's not going to gather enough steam to go straight up and through 60? Okay, but either way, if it does test up towards 50, 55, 60, you're up quite a bit. You've got a good little trade on your hands. But until we get through this falling resistance, I'm not inclined to buy it just yet. I want more price action to play out. It doesn't look too bad, but it's an each way bet. To me, it's more likely that it's going to actually push down and retest these lows off another lower high because the MAs are down, stochastics are up. The only thing in its favour slightly is that momentum's starting to lift. But that's not a reason you need to be proven. So I'd rather, if I was going to buy, I'd rather see my stochastics down here in the oversold territory and price to be at a higher level, something like this. And then you've got momentum starting to rise, and then you've got a potential for a breakout. All right, last one, BRN. Yeah, BrainChip's one we had. It hasn't done too much. It's sort of in a similar boat at the moment. Actually, let's draw that up. There's probably something to look at there. Missed it. My mouse goes too fast. Let's just do that again. There we are. Alright, so we're looking at, that's the trend there. So there's a chance it's pulled back enough. We've got our level here. It's quite clear at around 30 cents. Test. Didn't quite get there. Test and hold. So test and hold here. The more times it sort of pushed through there. This action here, you can see, did chop around there a bit, but it was the same sort of level before we had this real move up, power move up to $1. It's held. If this can, which is starting to hold, is a high low. Just because it's bounced off that level, just you got to remember it's not a confirmed. It's reacted to that level, doesn't mean it's confirmed. And if you're just drawing your line across there, we still could be in contraction. So if you're buying here, there's a likelihood, yeah, we could probably hold off there, and if you could be underwater for a while. But it's exactly the same thing. You've got this move up here, this pullback, this move up here. If we just take that and draw that up, I'm just looking for a high low. It's simple as that. If we get that high low come in, and then it starts to break up, we're probably breaking out of this contraction, lower highs off this higher low. Does that make sense there, John? So I think it's still got some work to do. We could get something how it's sort of popped up here, and then we could gradually over a few days we edge our way back down to 40, 45, and we continue in that contractive mode. Because at the moment, like I said, it just hasn't proven that it's breaking out of that contraction just yet. It's looking good. I'm more inclined to be a buyer of this than a seller. Well, a lot more inclined, but I just think it, like I said, I don't want to be wasting my money sitting around waiting for something to kick off. I could be right down the track, but big meltdown, I could be down at 20 before I know it. And then I've halved my capital in that trade at least. So just wait for that confirmation, see how we go. All right, that's it. I think that's it. Got through everything. I hope that helps everyone, guys. Last kind of look, see where this ASX is. Up 23, it's kicking along nicely. Look at that. Up she goes. All right, thank you very much for joining me, guys. We'll speak to you again next week. Now, just remember, I'll be talking on Spotty. Anyone that doesn't know, Google spotty.com.au, and you'll see my pretty head on there in previous talks. But I'll be talking there tomorrow if anyone's interested. Worth joining in, jumping on. If you've got any more questions, anything else, yeah, feel free. You can send through an email to them. You can send through Facebook or anything on Twitter under Spotty, and that will be requested on the show if there's something you're desperate to look at. Not just my opinion, but someone else's. You'll have some fundamental guys in there talking about it potentially. So yeah, feel free to see that. That'll be at 12 o'clock tomorrow. And so until then, I'll be back in next week at Monday. Happy trading. Good luck. And remember, if you like what you hear, it'd be great if you can leave us a like and subscribe if you haven't already. Cheers, guys. We'll speak to you soon.